All right, everyone, welcome back for another episode of This Weekend Charts via Conover Trades and Wall Street from Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon and come find me on ConoverTrades.com for swing trading alerts, analysis, and live day trading. Let's get into it this week. So we obviously had a busy week towards the end. It was quiet early on here. You can see Monday through Thursday, really quiet price action for the most part. And market was pretty well supported throughout that, although we did pick up some volatility towards the end of the week. If we look at the futures here, you can see obviously, unless you've been living under a rock, you're well aware of the news in regards to the Middle East right now. We had that big sell-off Thursday night. We put in a low in the overnight session and actually rallied back a little bit by the end of the day. We picked this up. I told members to hedge here with volatility on really, it was like Wednesday night. We were able to get in on that. And you can see here VVIX or VIX volatility. This was kind of forecasting a little bit of a divergence here. And this can be a tool that you can use sometimes. I actually picked up this on Monday even. If you look at Monday's open this week, VVIX gapped higher. It did sell off and close red, but if you look at the price action for the stock market Monday, we had kind of a flat open and it rallied. And so there was kind of a divergence really all week long. VVIX higher than the actual VIX, and VIX really even on Thursday afternoon going sideways and even putting in, essentially kind of like a little mini bull flag here versus the price action and the spiders Thursday afternoon actually was going higher. So you had that divergence there. We did pick up on that. We did hedge that with some volatility, which turned out to be the right call. And we took that geopolitical threat seriously for the simple fact that oil was confirming it, right? Oil was confirming this on Wednesday. We also saw gold showing signs of perking up. And yes, we did have producer price index tick up a little bit Thursday, which helped. But gold was up before that. Gold was up well before that producer price index number came in cooler. We had some cooler economic data too, which obviously helped out. But there were definitely some signs here that the market was going to take this seriously. Now, going into the weekend, there's lots of noise, there's lots of chatter, there's this and that. And the other thing right now, the big thing that's going on is Iran talking about closing the Strait of Hormuz. I'm not a geopolitical expert. I'm not a military strategist. Although there's no shortage of newly crowned experts out there in this matter. Previously, there were experts on, semiconductors and, tariffs, right? But yeah, they're out there. That said, it's from the people I've talked to, from my sources and what I've read, it seems unlikely that they would do that. It maybe just be a posturing, tool for them. That said, that's like 20 to 30% of the global oil supply right there. And you can see oil obviously up big. And I figured that this would hold up into Friday, Friday's close, even if talks kind of, the news kind of calmed down just because of weekend risk. So, oil held up well, gasoline up, hope you filled up your tank, up 4%. Granted, it's up 4%. Coming off of, basically 52-week lows. So it's not the same. We should adjust this chart here. There we go. So it's not quite the same as if it were, 5% at the highs. So it's more kind of just mean reverting. But nonetheless, definitely an increase in energy prices here. And, those are the risks right now. Going into this week, though, going back to the equity markets, looking at the S&P, this tape still should be fairly supported, just because you have a lot going on here with this quarterly expiry coming up next Friday. We also have a holiday shortened week this week too, and if this doesn't escalate too much, if it stays mostly contained, you could see something of, I don't want to say a right tail, maybe a right tail event for a Monday, Tuesday. You could see some upside. But I would say more so like a pinning effect. There is a lot of pinning that's going on right now from now until end of quarter between like 5,900 and 6,000 on SPX. And it's going to be difficult to unpin us. And you can even see on Friday, if that couldn't unpin us, we finished, we were down for the day. But we finished off the overnight low. It wasn't a bloodbath by any means. if that couldn't unpin us, I don't think anything else will. Now, we do have the Fed Wednesday. There's already a lot of predetermined volatility attached to that, though. So it's not as if that's sneaking up on anybody. And then we have a short week with Thursday. And then Friday is options X for the month of June. So I can't imagine we're really going to unpin too much volatility wise, but we could see some bursts. We could definitely see some bursts. I would say right now, just looking at the VIX, I'll just give this one out as a little freebie here. If this clears 22, I'm going to say right in that area, I think it could get to 25 pretty easily. Does it go much through that? I don't think so. At least not right now. That would be a little bit of a surprise to me. But if they're able to, if nothing really happens and they can get it back below 20, if all sellers get it back below 20, I think the market will just stabilize here. But, and again, by the way, geopolitical selling is often met with V-shaped style moves, just historically. That doesn't mean there can't be some sharp downside first, but generally it's a kind of a buy the invasion type thing. That said, again, I'm not saying there aren't risks, but just overall, that's kind of the big picture here. We're not that far off all-time highs either. The NASDAQ got pretty close here on the triple Qs. Look at that. 536, 537. I think it got there a little higher after hours on Wednesday. So only about 3-4 points away from that all-time high. A lot of people are talking about this. We go to the 4-hour here. We had kind of like a rising wedge structure-ish. Not the best drawing there, but a lower trend line break, we'll call it. And yeah, so maybe we could go down and test 5,900. We'll see if that happens. If that breaks, there's still a lot of support down here, really to 58. So this is still, as the trend is up, market is still acting well, and they're still pouring a lot of liquidity in the system. The Treasury just did like one of the largest buybacks ever, and we're in fiscal dominance, so that stuff matters right now. Speaking of Treasuries, I know bond fund managers are absolutely sick right now, looking at TLT down 84 cents. With like World War III implications going on here. 10 years ago, that would be totally unheard of. But anyway, so that's kind of what we're looking at here for the markets. Good sell Friday. We'll see if we get more volatility. Excuse me, QQQ. Again, just off all-time highs. Russell 2000 did close the week back below 210, so that's a slight negative. But, it's not the worst. If we close below last week's low, then I would be concerned. But right now, I think it can just chop around this area and build a base. So I'll give it the benefit of the doubt for now. Same thing with the diamond here. Good sell. Visa and MasterCard were down. So that did drag the Dow down. Remember, the Dow's price cap weighted. Semis down 2.3. They had a nice rally back in the middle of the week. Also, cloud software. So, it's not all losers right now. You get like defense stocks or cybersecurity right now. CrowdStrike, Palantir, of course. Zscaler has been on a tear lately. Look at this weekly chart. So these cybersecurity names and even Broadcom is kind of in that space a little bit. These are at all-time highs here. And so there's winners and losers in these types of environments. But cloud's still acting very well. Transport's down here. Again, obviously, big spike in oil. Still have a little inverse head and shoulder here that has not triggered yet, but it can come into play if we reverse back up. Taking a look at interest rates this week. So the Fed is not going to do anything. A pause is fully priced in. They've been pausing for a while, and there's really, we've been sideways here on the 2-year for like a month. So there's not really much else to say. If we start to break down, and we start to get below 3.8, 3.6, then I think we start looking at cuts. We did have very weak CPI and a very weak PPI this week. Well, we'll have to watch that and see if those continue and become a trend. But 5s, 10s, and 30s, we're up Friday, even with the geopolitical stuff going on. But interest rates have been backing off a little bit. XHB, so housing here, also backing off on Friday. That took a pretty good hit. It lost the 97 handle. Still has room for higher lows, but I want to see it back above 97. And then VNQ could not close the week above 90, but pattern-wise, it's still okay. It's still got a nice little base here, honestly. I have to say, VNQ looks okay here. Financials did back off. Again, we talked about Visa, MasterCard, XLF down 2%. On Friday, KRE, KBE, both down 2.5 to 3% there. Again, not the worst, but definitely want to see it hold that 50 moving average. We have broker dealers here down as well, but they are just off of all-time highs. So no problems there. Oil up 7.55%. It was up more than that earlier in the week, and I actually did an article on this the other day on June 4th. It was actually last week, and I said, you know, there's a case here for an oil short squeeze. If you want to check that out, this was a day or two. So I wrote this article maybe a day or two before the breakout of 64, and I laid the case out for that. And here we are, about 10 points higher. We almost got about 14 points higher from where I wrote that article. So a big move there in oil. Obviously, needless to say, gasoline, same thing. There's RB futures. Oil right now, it's hard to do. You obviously went up to the 78 handle, right? We haven't seen that since these two peaks in 2024. It's hard to say right now what can happen. If nothing too major over the weekend happens, I could see it back down at 70, 68 on Monday easily. But this is going to need to be a situation where the dust has to settle, because this is an emotional spike. It's an impulsive spike. So if you own it, you're long oil, and, from a swing trading perspective, just trail your stop loss up, take gains on the way up. Don't let it go against you. I wouldn't do anything else with it now. I wouldn't chase it up here. Definitely wouldn't short it. But yeah, big breakout here. So when you're trading, when you get geopolitical news, I mean, there's no telling. I mean, yeah, it looks overbought now, but what if it goes back up to, what if something happens, goes back up to 95? It can go there very quickly if something serious happens. It could also collapse back down to 64. So just be careful trading that volatility. XLE closing right on the 200 moving average. So oil stocks finally coming back, and I like how we got the weekly close back above 86. So that was good. XOP did clear the 200, and OIH got back to 250. Didn't clear it though, but nice recovery on those energy sectors. Been waiting for that for a while. Nat gas up 3 1/3, and yeah, it's hanging in there. No changes right now. Remember, nat gas not as sensitive to geopolitical tensions as the domestic market's a little bit different than how it works with oil. But anyway, dollar index down on the week. On the week economic data, it did bounce Friday though. I don't like this low here. I think this actually gets a bounce right now. But dollar is in a downtrend right now. Just FYI. I do think it can get a little squeeze here though. Gold, what can you say? It's basically at all times. You got a little kind of flag here. It's it broke out of that. We talked about dealer positioning a few weeks ago. Yeah, 300 GLD is very supportive. I don't think it goes much past 320 here unless we get a huge, development news-wise. But gold has held up well. Silver backed off a little bit this week. I also thought it was interesting that this didn't really move Friday. So, in fact, if you looked at silver just at Friday's candle, you wouldn't think anything happened. But it is still, I believe, going to $40. That's just a kind of like medium-term target. Maybe 42. But big moves here. Platinum had a big reversal on Friday. Where did it tell you it was going, guys? It's at 1300. High of the day, 1300 spot 5. So it got up to that level like exact. And nice reversal there. But I mean, what a move. Just be aware that this is a parabolic move with no base. So, and this metal is thin. It can come back down quickly. You got to be careful with platinum and palladium as well. Copper also holding up this week, although it did back off on Friday. But not the worst patterns, trying to change the trend back to the upside. Lastly, we got Bitcoin here, and Bitcoin was kind of quiet this week. It kind of had a round trip affair. Good bid Monday, and then it faded some of that back. Yesterday, we sold off with the equity markets, but it did close flat, as you can see. Closed back to flat. It's down a little bit today. I'm doing this on Saturday. But it's nothing terrible, right? We went to all-time high. We're just chopping and building a base there. I think it's okay. There is a little bit of, liquidity at 97, right? We never retested this breakout, so I could see that getting filled at some point. It's not out of the question, but I don't think that there's anything dire or anything wrong here with Bitcoin right now. Alts also had a pretty good pop earlier this week, and they did come back in. You can see ETH there. Still has a nice base, just wasn't quite ready to break. But overall, yeah, keep your eyes on VIX. Like I would say above Friday's high. If it stays above that for too long on Monday, it could get a little bit of a pop towards 25. So just be careful with that. That said, if nothing happens, we can see a right tail event where we just pump right up Monday. So just be cognizant of that as well. Overall, I think there's a lot of pinning effect going on into end of quarter. I don't expect us to make too big of a move. We could see some volatility, but I think the market stays pretty well pinned in this kind of upper range here. So anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on conovertrades.com. I'll see you guys all next week.